Hi, Kumar here, and in this video we're going to be talking about the different types of price charts and how you actually read them. First we'll start with the line chart. This is the one that you've seen the most so far in the module. As you can see, this chart is pretty self-explanatory. Each point is where price was at that particular point in time. So this point indicated right here was the price at this time right here, which is 0800 hours, and the price is this price right here, which is 1.4970. Similarly, you can take any point on the chart and determine the price of the currency. Here is the Ohlc chart. Ohlc stands for open, high, low, close. I'll just stretch this chart out for you. Now with this chart, instead of having dots that map out the particular prices at that set point in time, you can see a lot more information about where price was and where price is. For example, each bar here represents a pocket of time. The size of the pocket of time depends on which time frame you have chosen, and in this case we are viewing euro against US dollar on the hourly time frame. That means that each bar here represents 1 hour of price action. If I change this to the daily time frame, that now means that each bar now represents 1 day of price action. So it all just depends on which time frame you select. Let's take a look at the Ohlc bar in more detail. So let's say I'm going to select the 5-minute time frame now. That means that each bar represents 5 minutes of time. So each bar here represents 5 minutes of time. So for example, this first bar here started at 11 o'clock, as we can see right here. And so it closes at 11:05. And then at 11:05, this next bar started. And then at 11:10, this bar stops, and this bar starts. So within those 5 minutes, the price just keeps fluctuating within the bar, and as soon as that 5 minutes ends, the bar finalizes, and the next bar starts. So here we're looking at the individual Ohlc bar. So let's say that this is the 10 o'clock bar. It is showing the price that the currency was at 10 o'clock, which is the open of the bar. It is showing what the price was at 10:05, the close of the bar. And it is also showing the highest point price went to in this 5-minute period. Remember, we were looking at it through the 5-minute time frame. So each bar represented 5 minutes of price action. And it's also showing the lowest price went to in this 5-minute time period, which is the low of the bar. So this mark on the left hand side of the bar is whatever price this bar opened at, meaning whatever price the currency was at when this bar started. The mark on the right hand side is the price that the currency was at when this bar closed. So if this is the 10 o'clock bar, this is the price at 10 o'clock, and this is the price at 10:05. Remember, this is the 5-minute time frame bar that we're looking at. If this was a 1 hour time frame, then this would be the price at 10 o'clock, and this would be the price at 11 o'clock. But let's just stick to the 5-minute time frame right now and just pretend that we are just looking at a 5-minute Ohlc bar. Then in this 5-minute time period, from 10 to 10:05, this point right here, which is the high of the bar, is the highest price that the currency went to in that 5-minute time period. And this low point of the bar is the lowest price that the currency went to in this 5-minute time period. So that's how you read the Ohlc bar. The left-hand side mark is the open, the right-hand side mark is the close, the high of the bar is the highest price that currency went to in that time period, and the lowest point of the bar is the lowest price that currency went to in that time period. Now this is a green bar, therefore it means that the close is higher than the open. The green bar represents an up bar, meaning price rose in that time period. So any time the mark on the right hand side, which is the close, goes higher than the mark on the left hand side, which is the open, the bar is green. If this price of the currency dropped to lower than this point here, which is the open, and it went even lower, this bar would turn red. So here we have the exact same thing with the scenario that I just explained, that the mark on the right hand side goes lower than the mark on the left hand side. When that happens, the bar goes red because it's showing to us that the currency has fallen in that time period. The high of the bar still represents the highest point that the currency went to in that time period, and the low of the bar still represents the lowest price that the currency went to in that time period. The right mark is still the close, and the left mark is still the open. Now let's look at the candlestick chart. The candlestick chart is very similar to the Ohlc chart, but it shows even more information. This is the candlestick chart. This is the type of charting that we will be using in our trading, and it is easier to see the price values, which is the open, the high, the low, and the close, on this candlestick chart rather than the Ohlc chart. This chart is the exact same as this chart, which is the Ohlc chart. They are just represented in different ways. As you can see, this is the Ohlc chart, and then this is the candlestick chart. You may even say that the candlestick chart are just fatter Ohlc bars. As you can see that the only difference here is that the open and the close is now represented by the top and bottom of the body of the candle, rather than the small lines sticking out of the bar. I'm sure you'll agree that it's a lot more easier to see the open and close through the candlestick bars. The body of the candle is green if the close of the bar is higher than the open of the bar, which is an up bar, and the candle is red if the close of the bar is lower than the open of the bar, which is a down bar. So it's exactly the same as the Ohlc bar. This is the hourly time frame, this is the 5-minute time frame, this is the 15-minute time frame. So here on the 15-minute time frame, what it means is each bar here represents 15 minutes of price action. Just like the Ohlc chart, but it's just that we have a body of the candle rather than just a little bit of a line sticking out on the left and a little bit of a line sticking out on the right, as in the Ohlc bar. So here we have an individual candlestick bar. Let's say that we're looking at the 5-minute time frame here. So this bar represents 5 minutes of price action. Let's say that this is the 10 o'clock bar. So it's showing the price that the currency was at 10 o'clock, which is the open of the bar. It is showing what the price was at 10:05, which is the close of the bar. And it is also showing the highest point price went to in this 5-minute period, which is the high of the bar, and the lowest price that the currency went to in this 5-minute period, which is the low of the bar. It's a green bar, so that means that the close is higher than the open. I also want to point out that here we have the body of the candle, and we also have the wicks of the candle, which are also known as the tails of the candle. So here we know that the bottom of the body of the candle is the open and the top of the body of the candle is the close because it's a green bar. Had this been a red bar, then we'll know that the top of the body of the candle is the open and the bottom of the body of the candle is the close, because we would know that it was a down bar. That price fell in that time period. Here we know that price rose because it's a green bar. So here's the red bar. Everything is exactly the same. We've got the highest price that the currency went to in this time period, the lowest price, which is the low of the bar. We've got the close and we've got the open. Now notice how when the bar is red, the top of the body of the candle is the open price and the bottom of the body of the candle is the close price. That is because it's a red bar. So we determine whether the top is the open or the top is the close, and the bottom is the open and the bottom is the close, by the color of the candle. Red means that the price fell, meaning that the close is lower than the open, and green means that price rose, so the close is higher than the open. So that's it for the different chart types. From now on, each chart that is displayed will make far greater sense to you. We will always look at the candlestick chart from now on when displaying any forex charts, because of its transparency and best interpretation of price action. Please continue over to the next page of the training and I'll see you in the next video.